So hello and welcome to another update video about ADA. So yeah, it's getting increasingly likely, in my opinion, that we're going to lose support here. It just can't get off the ground, yeah. And we talked about it would eventually most likely get into this green support area down there between 32.6 and 27.6 cents. The only question that really remained is, do we go down straight away, like in an A wave, where the A wave would sit here, the B wave here, and then the C wave comes down like this. Yeah, so do we go down straight away and have this particular pattern, or do we have a situation where we say, okay, we come down in an A wave. The B wave was not just the rally to the upside, but actually we're going to get a clear three-wave move, as I highlighted it here in orange. A, B, C in B, which, to be honest, I would still prefer, just because it would look better. Because the move of those lows here, of the 13th, 14th of February lows, this move up looks rather impulsive. Therefore, it could be an A wave in a larger B wave, but okay, we'll see. Doesn't need to. And then we come down from there. So these are the two scenarios in what you would consider in the overall primary scenario, where in the wave 2 we would need to reach at least the 50% level. Yeah. So you've got a bit of uncertainty there. Are we going to lose that support straight away, or do we go up first and then come down? But you know, eventually we should get there in the primary scenario. In the alternative, of course, we can say that wave 2 was already finished here, which is why I have highlighted this as a a five wave rally to the upside here as a wave 1, because it can be counted as impulsive. Now a wave 2 down, and we should then rally higher. But the thing is, few reasons why this is only the primary. First, the secondary, the alternative, basically. It is because if wave 2 really ended here on the 13th of Feb, this wave 2 would not have reached the 50% retracement. I don't think that's ideal. Normally I want to see in a wave 2 the 50% retracement. Then, time-wise, yeah, if you look at the time it took from the December lows to the February high, a month basically, so that's typically not corrected within a couple of weeks. Okay, it's a bit short, not impossible, but a bit short. Okay, so that's the other problem. And the third problem is that in this would have to be a 1-2 setup here. The move that started on the 13th of February at 35 cents, when it rallied to around 41 and then came down just now, or is coming down. This has retraced a little bit too much to make it a likely 1-2 setup. So that's why this is only the alternative. So hopefully that gives you a little bit of my introduction to my thought process here. But note that this support area is very, very relevant. So that's why it's so difficult for it to break it, to finally get into our larger support. Because this area here around 34.5 cents is the 38.2 Fib level of the larger cycle. And we have structural support, where we had support before and now again. Yeah. So it is important support, but we're forming here something that you could call a head and shoulders pattern that might take us down into this support area. Yeah. But obviously it needs to break. Now again, the question is, do we turn around here or not? In my opinion, the prospects of turning around are not very good here anymore, because it's just bleeding out, sort of. But again, as long as we're holding this low from the 13th of Feb, it is still valid to expect higher. But yeah, I think there are other charts that point a little bit clearer to the upside than this one, especially as it just can't get off the ground. I mean, I can still count this here as a small 1-2 setup. Did that yesterday already. Yeah, just resetting this wave 2, but where you have an A, B, C pattern and the C wave maybe as an ending diagonal here. But that would sit here, so that a 1-2 setup, and that would set us up higher, but then it really needs to turn around now and break above 36.4 cents. So, you know, it's all about a little bit slow at the moment. it's all about, do we hold this 34.5 cent level or not? Because that is the 13th of Feb low, and a break of that would most likely send us down into this support area. And if you zoom out a little bit, this would really look much better. This sort of, ideally this direct sell down, I mean, either way, to get into this area immediately, eventually. So wave 1 up, and then A, B, C down would look like it should, yeah. Or, and that's the other version, wave 1 up, and then A, B, C, and B, and then C down. That's also fine, yeah. But starting directly from there and going to new highs would look a bit strange. But from a structural point of view, what they normally do. That's why this is only the alternative. But yeah, first of all, in the very short term, it's all about, do we hold this 34.5 cent level? And key support levels here on the very, very short term, on the micro level, it's really here the 35.2 cent level. That's key, the 78.6 retracement. I would, again here as well, activate the 88.7 fib level, just because I think we came down to the 88.7 fib here, and it just seems to have difficulty. So the 88, normally when a 1-2 setup comes down there, I say it will fail eventually. So yeah, I don't have, because we failed with the 88.7 here, I think a few times, I don't have much confidence anymore that this will go up. Therefore, I wouldn't necessarily trade this aggressively on the long side. At the moment, at least. Okay, that's my update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership, and also make sure you follow us on Instagram and Twitter. There you can find additional content every day. And if you're interested, check out our trading course on morecryptoonline.com. Thanks a lot for watching. Bye-bye.